Before we begin with today's market analysis, I would like to mention our new channel membership options. This is a special introductory offer which will open access to members-only trading strategy videos that are based on high-value, high-conviction investment strategies and are characterized by superior risk-to-reward metrics that target massive, market-beating returns over time. Please note, this is a limited time offering of just $9.99 per month, but members that sign up during this introductory period will be able to lock in this new low rate for the entire duration of the membership. Again, this early sign-up period will allow you to lock in this low introductory membership rate for life, and these new low introductory rates will only be made available for a limited time. Monthly membership prices will be going up after this short introductory period ends. With these comprehensive, members-only trading strategies, I only choose high-quality, high-conviction stocks that are easily accessible, with relatively low share price values that are designed for easy trade positioning, and combined long-term trading gains are expected to far outperform the monthly membership rate of just $9.99 per month. Join now to lock in your low introductory rate and start trading stocks with the pros. Now back to the video. Here we have the 4-hour price chart for BROADCOM Incorporated, stock ticker AVGO. As we can see here, the stock is, we're still trading under some pressure here, but for the most part, we have stabilized a bit. There has been a recent bounce from these shorter term lows, and we will identify some important support and resistance zones so that we can try to identify some price levels that can be used for trading plans. Currently, what we're looking at here would be a low that came in at these lows came in at 145.53. So, if you've been watching my prior videos on this stock, I have been watching this 151 area as a potential zone to watch on the downside. And then, as we can see here, the stock has breached this area at this point. The reason I was watching this 151 area was due to the fact that this region marks the 61.8% Fibonacci retracement of this dominant trend move. And it also, a test here would sort of result in this prior price gap being filled for the stock. For the most part, anybody that's watching the stock market as a whole understands that, most of the market has been under significant selling pressure for the past 2 weeks or so. And these price moves have been fairly extreme to the downside. One stock that I could point to several stocks here, but one stock that I can point to in particular would be Meta Platforms. If anybody's interested in watching that video, that stock has completely collapsed. I do recommend kind of taking a look at that price chart. I posted a video on this today. That stock has just completely fallen through the floor. And this has been fairly widespread activity throughout the market. I mean, even Microsoft is heading lower at this point. And when Microsoft is heading lower, pretty much everything is experiencing some type of selling pressure. So, it's to be expected here that we would be seeing some additional price declines here with BROADCOM. But what's interesting to note here is that these lows really did bounce from this 200 period exponential moving average on the 4-hour chart. So we can kind of zoom in here and see this. I'll delete this trend line here just so we can see it a little bit better. But we did see a spike off of this 200 period exponential moving average, which came in just below 144. Just below 145. Overall, this is a green candle, so this does tell us that the price close was higher than the price open, despite the fact that we did fall through some major support zones as this was happening. The real question from here will be whether or not these next candlestick patterns are positive or negative. Because if they are positive, we will start to see a reversal structure here in the candles themselves. We're not quite there yet. I'm not saying that this will happen or won't happen, but these next candlestick patterns are going to be very important in order to determine whether or not we have actually seen a bottom here. If we do breach through these prior lows, which came in right around the 145 area, the next level to watch to the downside would come in at the 78.6% Fibonacci retracement of this dominant trend move in the upward direction. And currently this level comes in just below 141.80. So, it's possible here that we could see a bit more of an extension But it really is going to determine, this really is going to be determined by whether or not we're able to see a reversal pattern in these coming candlesticks. What I would prefer to not see would be sort of a sideways consolidation period here. If we do see that, that would really be a suggestion that the market is kind of taking a breather and is ready to probably start moving lower, given the fact that the indicator reading here does suggest that negative momentum still dominates this market. We have not yet broken through this negative trend in the relative strength momentum reading. So this is a negative sign here, and this does make me a bit reluctant to call the bottom at this point. As I said, the next level to watch if we do continue to see further price movements lower would be the 141.80 level. But if we do see a convincing break below there, that does then start to look like we're going to retrace this entire bull wave here and retest these prior lows, which came in just above 130, roughly 130.20, 130.20. So, we do have this negative momentum reading, but we're also going to start to move into oversold territory relatively soon. That will be an important thing to watch. And then in addition to that, we really should be watching, keeping an eye on these trading volumes, because what we've seen here is a steady decline in the attention that's being paid to this stock. I mean, as we can see here, we saw a fair amount of trading volume activity, and it's just continued to decline as this price action has declined. So, these movements lower, they're a little bit less sustainable, given the fact that, we haven't seen, excessive trading volumes occur as these sell-offs have happened. So ultimately, it's very hard to argue with the point that, these broader sell-offs in the market really could be what is generating all of this downside momentum. I don't find this to be a Broadcom specific move. I think that there's just a lot of uncertainty in the market at this point. It's the summer trading period. Some people are probably exiting positions. August tends to be a bit of a negative month historically. So, there are several factors involved here. And then we have to, just consider the fact that technology stocks have had a major run up this year. Some people have called that, irrational exuberance. Nvidia in particular, maybe Nvidia ran too far in the opinion of many people. So, these are really the factors that are most likely dominating this stock at this point. I don't see any specific, Broadcom news that would suggest that this stock should be trading lower. And for that reason, we do need to keep watching here for potential opportunities to the downside. We recently saw the stock split, so that will make it easier for some people to sort of add to their positions and scale in and out of their positions. Overall, we will be looking for trade entries here to establish long positions, but we just need to see a bit more evidence here that these declines have actually run their course and that we're ready to start reversing in the upward direction. So here's the current market analysis for Broadcom Incorporated, stock ticker AVGO.